Hello everyone. Welcome. It's Andrea, as usual, HFM market analyst. So I'm here today once again to give you another educational session. This time in regards to the VIX, the very well-known Volatility Index. So before we start, as usual, I would really appreciate a feedback in regards to the audio, and obviously if you face any visual issues as well, please stick it in the question box so I can help you further. Thank you very much, Zora, as usual, the very first here commenting. But thank you very much for your feedback. Quick reminder regarding to our email service, webinars@hfm.com. So everything is running smoothly. Valerio is saying perfect. Good, we're good to go. So since I have the feedback from you, I'm gonna go through the disclaimer warning. And once we're done, we're gonna start the session as usual. I have already provided a handout, so please click on the handout section and download the PDF file of the webinar. So of my slides, the conversation of the slides into a volatility into a PDF version. Sorry. So this material is provided as general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning. Trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved. Take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. You can find our full risk disclosure in our website, along with any legal documentation that you might need. Okay, guys, so feel free to visit our website, www.hfm.com, and you can find any legal documentation that you might need. I can see Jeremiah, please send me PDF of how to trade. So I guess you're referring in general on how to trade in general. I mean, how to start, how to learn how to trade, or you're referring to this particular topic, which is how to trade the VIX. Because if this is the particular one, I have already uploaded the PDF version of the webinar, so please download this in the handout section. Okay, Jeremiah, thank you. Okay, we're good to go. This is me. I know that I will skip the introduction, to be honest, because I can see that I have familiar names over here that so you know me, guys. I'm trying my best to help with anything you need. So I would like to let you know that we're gonna keep we will try to increase the number of live streamings as well. By saying live streamings, I'm referring to social media live streaming, YouTube, Facebook, LinkedIn, and Twitter. In regards to the amount of webinars, we're gonna increase into 8 a month. So eight from actually 12 a month. So Tuesdays, Wednesdays, and Thursdays. I'm really curious to your audio is going in and out. Okay, I'm gonna change headset. Apparently, it's this wireless headset that this is the problem. Okay, I'm gonna change headset. Thank you for letting me know, Nicole. Okay. Hi guys, can you hear me now? Better, worst? So, Jeremiah, I have seen your question. You're a beginner, so you need to start learning from scratch. Fair enough. I have some PDFs that are for beginners, but I will just, firstly, I would like you to check our past webinar website, find the webinars that you are interested to watch and have notes and etc. and send me. Let me just send privately. So have a look first of all on this website. Okay, it contains recordings and in the format of a YouTube video, but also podcasts. Have a look first, and if you have the time, also watch our webinars. And for any of those that you need slides, PDF, please write them down and send it to me via webinars@agefm.com. I would really appreciate that. Okay. So yeah, let's move on. So what we're gonna cover today, obviously, what is the volatility index? What is the VIX? Why and how to trade the VIX? What does the volatility index signals? And as usual, I'm gonna try to cover as much as questions as I can. So first of all, let's start with the obvious. What is the VIX? Okay, here we are. Perfect. Okay. I'm not sure how many of you actually trade VIX, but based on its name, right? It's VIX. Volatility is a shortcut for, it's an abbreviation of volatility index. Can anyone tell me, by just without, just whatever it comes to, like whatever it, there is no right or wrong question, by the way. I want to, when you heard about VIX for the first time, when you heard about volatility index, what were your thoughts about what that asset might be? Anyone? Anything, honestly, anything. Okay, obviously on the slides, I've put down what it means and etc. But I just want to see your first thoughts about that index, about this asset, actually, instrument. It was related to S&P and moves opposite. So well heard, it was related to S&P and moves opposite to S&P stocks, Nicole states in our question box. Anyone else? Jeremiah, my thoughts were that the parameters that is a parameter that determines profits and loss. Okay, that's an interesting thought. So guys, for me at least, when I heard volatility index, I didn't have any, I mean, but literally by just saying this phrase, volatility index, I just thought, okay, that might be something like a tool to measure volatility or something that shows volatility. Okay, so I just stick on the name volatility. So I thought that it just shows with some formulas or something, the volatility in the markets in general, globally. That was the initial idea that I had, which wasn't precisely um, the correct definition of VIX. But when I saw volatility index, I'm not, to be honest, I don't have a lot of fantasy or something. I don't know, a big imagination or something. So I just stick on what I saw. So measure of instability. Okay, that's one way to state it. Well done, Paul. Yeah. Nicole, Barak, rapidly changing markets. Well done as well. That's Nicole. Still don't get how the options rising and falling signals how the stock market is moving based on the larger sentiment in options. We're gonna have we're gonna check that one as well, Nicole. No, Andrea, you might be right regarding global effect. Everything seems to be connected as well. You are absolutely right about that. We have we have strong correlations in the market. Yes, that's one way to say it, but it's not a representation of the global volatility that we have in the market. Okay, so let's go through it. It's a very important and a nice indicator for identify the volatility in general, even for the globe, but it's not always the case. So I don't want to but usually, yeah, you're right. It might present the global effect as you already mentioned. So let's dig into it. So volatility index VIX, a quite new. Okay, back in 1993 it was created back in 1993. So so the past 20 years, let's say 30 years. So not from the beginning of the financial markets, as you understand. So it was created in 1993, as I mentioned, by the Chicago Board Option Exchange, the well known as CBOE. And the definition of it, or how is it calculated, it's the formula that's being used to create this asset, to calculate this to actually to create the formula that that this asset is based on is based on S&P 500 index. Okay, so that's why I said that. Okay, the most of the time, indeed, it reflects the global volatility, but that's not always the case. So I don't want you to take this for granted, because it's based on the S&P 500. So, and more precisely, the formula is based on 8 stock prices of the S&P 500. Okay, so as such, is an instrument, okay, which presents the volatility of the
S&P 100, and as a consequence, the volatility of the US stock market, because S&P 500 is one out of three major indices. So the idea, okay, is that VIX and its value, how it moves, it gives us a nice base, a nice indication of how volatile the next market movement will be. So that's why it's so famous, even though I can see that a lot of traders don't really prefer it. But yeah, it gives information in advance, so it gives some clues in advance, ahead of time. So the number that we're seeing, so how it looks like, let me just, okay, it's a usual asset, a usual instrument. I will come in, will explain a bit why I circled this, highlighted these areas. But even though it's not preferable, as I have seen from traders, oh my God, Nicole, I'm glad with your comments. I hope, honestly, I hope that I help you with all these sessions, that I truly help you. So, as I was saying, the key is that it helps you making actually trading decisions, because it's based on how volatile the next market movements will be. So some say that market volatility will grow alongside the growth of their index values. So if the VIX is low, the market will remain stable because there is no volatility. So if the VIX is low or steady, it's sideways, what that means, it means that there is a lack of volatility. So that implies that this lack of volatility implies that markets are stable. So it's also known, before I present an example, you might heard it as the fear index. Okay, and I like this name, to be honest, as the fear index, because this is literally what it is. When the majority of the markets, okay, the majority of the market participants are not afraid, afraid, yes, why not, like they are anxious, worried, there is a negative market sentiment. This will be represented by this instrument, by the instrument, about the VIX instrument, and as I said, is the index of future volatility in the US stock market. So when the index values, when the VIX grows, okay, rising, this might mean that the market is expecting serious movements, sharp movements. I'm not suggesting that the market will see sharp movements to the upside, okay? Either way, either to the upside or to the downside, but it will see, we are, if the VIX is rising, we're expecting serious movements. Now the direction of the movement is a different story. So with VIX, we can spot when the market is about to enter a strong rally or a strong drift, and we are also able to find out whether the market lacks of volatility, and so it will range. It will be in a ranging market. It will be sideways or consolidating. Okay, so I'm not suggesting that it gives you direction, but it certainly gives you volatility. So whether we're gonna have in the near future serious, strong movements. There is a correlation between VIX and stocks. You're right, Nicole. Give me some time, okay? So, okay, let's move on. So you mentioned earlier options, okay? And you were absolutely right in regards to the options. So what did you, let me check your comment earlier in regards to option. So Nicole asked earlier, actually stated earlier that I still don't get how the options rising and falling signals, how the stock market is moving based on the larger sentiment in the options. So I'd like to add a bit, I would like to clarify something, okay? Investors, traders, in general, market participants, okay, they use VIX, okay, to protect their overall portfolio. Only if we are going through some difficult time, during times that there is a very, that it's expected, that it's anticipated to have a market turbulence. So when the market participants expect the market to become more volatile, they tend to purchase VIX call options. So, okay, so these options tend to increase in value when the VIX rises. Okay, so this is the correlation between the VIX CFD asset or the VIX instrument in general with the VIX options and the market, the potential market turbulence. Okay, and I cannot really pronounce this, but yeah. So they have this unique, let's say, characteristic, the VIX futures and options. They have these unique characteristics, which they are treated from investors and traders as like safe havens. So when there is a market turbulence, or when they're expected to have a market turbulence, investors, traders tend to purchase, as I said, VIX call options. That's why we see VIX rising. And the more the uncertainty that there is out there, the higher the volatility, the higher the option premium, so the more expensive the VIX gets. Okay, so more uncertainty, a higher VIX, higher option prices. So let's move on. Okay. So it's okay. It's not. I guess everyone is a trader solely over here. Don't know how many of you are also investors as well, but there are a lot of questions. Okay, I'm gonna get back to you, Jeremiah, in a bit. Okay. I forgot what I. So yes. So how many? I don't know how many of you are investors as well, but you need to be aware of this background in regards to the VIX call options and the VIX put options, because it affects the VIX asset as well. So the higher the VIX call options are, the higher the VIX instrument will get. So the more the uncertainty in the market. Okay, while and this, by the way, guys, the VIX call options make a natural hedge against downwards price shocks as well. Yes, so over here, what we have, we have, I have highlighted the peak of the VIX and some bottom of the VIX back to 2022. Okay, so they back then, like actually in January, at the end of January last year, the beginning of March last year, we have seen the VIX retesting record highs. Okay, so these actually indicated. Can someone of you tell me what that means based on what we covered so far? Jeremiah, I can see your questions in regards to Zambia. Unfortunately, we don't have an office in Zambia. So maybe you can have an online session with our team in South Africa or in Kenya. Let me know whether I can assist you further, but you can contact our representatives. Basically, you can have actually an online session with them if you need any help. So let me know, and I will try to I would try to help you. Okay. 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 We have covered all of the questions. So, everyone. So, as I was saying, let me get back to the slides as well. Remember that we mentioned the higher the VIX gets, the more there are uncertainty in the market, right? Yes, Nicole, you're absolutely right. High uncertainty. No, pandemic was back in 2020. Okay, you're right. Actually, let me show you also what happened back in 2020. So let me just show you. Since you mentioned pandemic, you're absolutely right. But what are in my screenshots? I had a 2022 performance. So here it's the VIX future, and this is what happened. This is the monthly chart, as you can see. Let me just. Okay, can you see my chart, guys? Yes, you can. Okay, perfect. So can you see, this is what Nicole just mentioned in regards to the pandemic. So here this is VIX back at the pandemic, back in March 2020. So that was that was an impressive actually rally, extremely high, reaching actually to levels that we have seen since 2008, the global economic crisis, the global recession, also known as the global recession. So these 2008 and March 2020 are they have in these two events, let's say, into these historical years, we have seen the VIX rising rising extremely high. Okay, breaching, as I said, the 2008 area when the world became immersed in a tremendous economic crisis. So indeed, as you understand, the instability at the beginning of 2020 made investors fearful. Okay, so this resulted in a serious spike of VIX and, as a consequence, a serious slump in stocks. So Nicole, you mentioned earlier about the correlation between VIX and the stocks. So we have a negative correlation. And you are absolutely right. you mentioned that. I didn't want to. I wanted to cover first of all some the theory of VIX before I actually confirm this correlation that you mentioned. But yes, there is a negative correlation between the VIX and the stock market. So over here is very clear, as you can see, it's clear that when the market is fearful, is falling into deeper down in the red, panic, when the uncertainty prevails, so that gives a boost on the VIX values, and that's why we have seen VIX values rising. And actually 2020 is a great example to understand VIX and the correlation, and why it's called as fear index. So, and back to 2022 and my example in 2022, just in the medium term. So let me zoom out. This is a daily chart. Here we are. Can you, this, what I have highlighted over here, March 2023. Does anyone remember why we had this boost in VIX in the March this year, 2023? Anyone? Was the war. Exactly. So that you see, even in the near term, every actually in general, during as I said, during times that there is a lot of uncertainty, a lot of fear, either in the near term, in the medium term, in the long term, we have seen the VIX spiking higher. So Ukraine, absolutely, Nicole, absolutely. So bounce reverted 4 months losses just in 3 days. Just in 3 days, we have seen the VIX instrument reversing 4 month losses. So how it can be used? Let's get back to our slides. Let's get back to our slides. As I said, there's a very, very strong correlation between VIX and the stock market. But before I show you the correlation with the S&P 500, I would like very briefly to explain how to use the VIX. So as we already mentioned, any financial crisis, any geopolitical crisis, in general, anything that hits the interest of traders and actually turns the market participants in general to try and turn into safe havens, into assets that don't lose their value, such as gold, because they want a safe investment ahead of a potential market turbulence. This sentiment, this shift on the sentiment can be represented for the VIX. So some economists are saying that that it was the financial crisis of the banking sector that hit the interest of market participants towards volatility so badly. So in order to satisfy the demand, some products appear that facilitated investments in ETFs and notes via the VIX. So on the one hand, though, these investments allowed making a profit on VIX movements or hedge risk of possible market slaps. If the market slaps into a lengthy correction, okay, buying the VIX can compensate for the drawdown of a portfolio and can be used as a hedging instrument. By opening now a position in the VIX, have in mind that a trader can balance out other stock trades in their portfolio and hedge their market exposure. So for example, here we have S&P 500 and we have VIX as well. So if a trader or anyone buys stocks, okay, included in the S&P 500 or the S&P 500 as such, and looks for smoothing out possible consequences of the short-term growth of volatility, they might open a buying trade in the VIX to decrease any risk of corrections in the stocks. You get what I mean? This I'm trying to explain how the VIX is used for hedging their market exposure. So if a trader buys a stock, which is included in the S&P 500, and tries to limit any potential losses and decrease the risk, and etc. Also, they occasionally consider to open also a buying trade in the VIX. If the trader is mistaken, volatility has not grown, the profit from buying the stock compensates for the losses from the long position in the VIX. So it's quite useful for risk management as well, for limiting your any potential loss in the stock market. Okay. So nice example. Thank you very much. Did it go up for Israel and Hamas? Yes, it did. Of course it did. Let me just get back to my MT5. And so let's see together. It was 7th of October, if I remember correctly. So that was the Israel Hamas. Yeah, it was 7th of October. Here we are. So it was over the weekend, and we can see the 9th on Monday. Actually, no. It seems that it didn't fall. It wasn't satisfied. This correlation wasn't satisfied on the Israel-Hamas war. What does the law that you highlighted mean, please? Okay, the law that I have highlighted, dear Nicole, it means that there is a lack of volatility. So the lower the VIX gets, that presents, especially if it's sideways and it remains sideways at the bottom, at the low territory, that implies to a lack of volatility. Okay. So that implies into so let me just zoom out as well. Oops. As I'm saying over here in my example, the lower the VIX gets, that implies to a lack of volatility, and that tends to indicate a stability in the market. And more precisely for the S&P 500, it presents that the S&P 500 is likely to be experiencing stability. Okay, because exactly what we explained earlier with the fact that, where is it? We have some put options in the stock in the VIX market, so that's why we're seeing correlation between VIX and S&P 500. As I said earlier, investors are turning to tend to purchase call options, VIX call options, if there is a lot of uncertainty in the market. So the more call options they purchase, the higher the VIX number gets. So let's make the hype pattern falling sky. But always, Nicole, trade what you see, right? Not what you think. You need to confirm it. You need to see it in your charts. You need to trade what you see, not what you think. So let's move on. Okay, I'm not gonna go through the formula, but this is just for this is a very complex mathematics. Anyway, you don't need to be aware of the formula that in which the VIX is based on. It's just for your own information. But as I already mentioned, it's actually it's been used as a benchmark for the entire US stock market as well. So you need to try and understand the theory behind VIX and everything that we have just mentioned in regards to the put and call options, because it's a very important indicator of the entire US stock market. So let's move on. Any questions so far? Any further questions? Okay, so I saw your comment. Yes, yes, it's a very helpful statement indeed, Jeremiah. Very important statement, because okay, at the end of the day, fundamentals or any historical data, they need to be also implemented in the charts and have a confirmation in our platforms, right? So not to speculate any potential move without double checking with the actual price action. So why trade the VIX? Okay, why trade the VIX? As we already mentioned, there is a strong correlation. Actually, it is the benchmark, as I said earlier, of the US stock market. And as we seen earlier with S&P 500 and the VIX charts, there is a strong negative correlation between the VIX and the US stock market. But remember, volatility is a measure. VIX is a volatility index, and volatility is a measure of the movement of an asset's price rather than the price of the asset itself. So, as I mentioned earlier, VIX does not represent a direction. It just strictly represents the anxiety, the fear, the uncertainty of that there is in the market. Okay, so as VIX reaches extreme highs, okay, this is a sign of impending bullish pressure on the US stocks, and more precisely the S&P 500. If the VIX reaches extreme lows, it's a bearish sign of the US stocks, and more precisely for S&P 500. So there is even a mantra about that. There is a mantra stating that when the VIX is high, it's time to buy. When the VIX is low, look out below. I kind of like this quote, let's say, this mantra. So, and I was explaining earlier, based on that, it's very useful as for hedging by portfolio managers and traders as well to manage falls in their equity portfolio. So the value of their portfolio falls, but they make some gains on the rise in volatility. They are call options on the VIX, as we explained earlier. So for the past few years, let me share empty 44. Once again, for the past few years, here we are. For the past few years, we have seen the VIX trading below the 20 level. So let me just zoom in so you can see it. We'll put a note on the 20 territory. Here we are. So actually, it has been below 20 levels since April this year. So if the VIX is trading below 20, then this means that the market was considered to be in a period of stability, while any levels of 30 or more indicate a high volatility. And you can see that clearly. Let me zoom out. You can clearly see that mainly the last 2 years, so since the pandemic up to the end of 2022, it was mainly above 20 and even reach levels such as 40, 50, 60, even 70. And over the past 2 years, you know that we have faced a lot of uncertainties globally. So, but currently is well below 20, more precisely is at 14.67 today, right now. Something that indicates that overall the market is considered to be in a period of stability. So also the VIX is thought to predict top and bottoms in the S&P 500, okay? So as it reaches extreme highs, this is seen as a sign of embedding bullish pressure on the S&P 500. And as it reaches extreme lows, it is seen as a bearish for the S&P 500. This is why I mentioned earlier the mantra stating that when the VIX is high, it's time to buy. When the VIX is low, look out below. Like all indices, when you trade the VIX, you aren't trading an asset directly because there is no physical asset to buy or sell. Instead, you can trade the VIX by using derivative products such as this one that I'm presenting right now. Derivative products of VIX actually are designed to track the price of the volatility index. Okay, so with HFM, you can use the derivative product, the CFD product, to take a position on the movement of the VIX as well as VIX futures as well. So there is actually, I would like to note that okay. So what you see, as I already mentioned, is the derivative product of the VIX, of the volatility index, of tracking designed to track the price of the volatility index. So let's move on. Over here, I also have actually a 2-year performance in which you can see clearly this negative correlation that we talked about. I would like to do that as well. Let's see together. Let me put side by side the VIX and the S&P 500 side by side. So you can see this overall downtrend, down channel to be more precise in VIX, and how S&P 500 performs as well. So price action, weekly chart as well. So side by side, you can compare the two. Let me just sort this out. So this is November. Okay, here we are. So let me put the channel on the VIX. So here is the performance since August. Can you see that? It's a downwards channel. Let me just detect a bit the standard deviation just to satisfy. Here we are. Excellent. So you can see that it's in a clear down channel. This is the VIX on the left hand side and S&P 500 on the right hand side. So lower lows, lower highs. So here we had this back in October, 9th of October. The next lower high is on the 12th of March. The very next one is on the 16th of October as well. So let's have a look now on the S&P 500 since August 2022 as well. And you can see that is in a upwards trajectory. So here we are. There was a bottom seen on the 9th of October indeed, okay? The same week, exactly in the same week. There was a higher low on the 18th of December, another one on the 12th of March, right? It was, and then we can see that it kept moving higher and higher and higher until we have a fresh higher low on the 22nd of October. Can you see? I think it's pretty clear how strong the correlation is in the medium and long term, because this is a weekly chart, okay? Now, so as I mentioned, exactly because we have the strong negative correlation of the VIX instrument and the VIX and any VIX linked instruments with the stock market, it is widely used for hedging, but also for diversification of the portfolio. Okay, so so it's if there is the need of balancing out any stock positions in your portfolio and hedge your market exposure, this is the way. So what about the short term now? Let's change it. So this is the 1 hour chart in both assets, so S&P 500 and the VIX. And once again, considering that the VIX represents future market, any future market turbulence. So the fact that it kept moving lower and lower and lower the whole week indicated the lack of volatility, or that the fact that volatility is low, something that, as I said, indicates a potential boost of the stock markets, and we can see this literally on the S&P 500 as well, which had a very nice and strong rally since yesterday. Spiked to 45.71, and we have the last I will say since the last 13 sessions, we have seen a bit of a pullback, with that coinciding with a slight recovery, a slight correction of the VIX as well. Okay, so still, what I'm trying to show you over here is that it can also be used in a short-term time frame. Although although it is something that in general is being used for long-term prospects, okay? But still a very interesting and helpful indicator for short-term prospects as well. So although you believe it has a long-term prospect, you want to and if you want to reduce your exposure, it can be also useful for spotting any short-term volatility. So Jeremiah, I did not hear the answers to my questions as I had lost the voice. Okay, let me check because I think I replied to everything. Let me go higher. Jeremiah. Okay, in regards. Okay, so you're asking me in regards to any email, any contact information in regards to our agents, our local agents. Actually, I would really appreciate if you visit our website and there is a live chat 24/5, actually 24/7. Sorry, and please um, uh, use the live chat on our website, and our team, our support team, will give you any contact details in regards to our offices and our local agents. Okay, thank you very much. But yes, we don't have an office that you can visit in Zambia. We do have, though, in South Africa and Kenya, which I don't think it's not easy to travel over there. So, but yes, but please stick your request in our live chat, and the support team will try to help you. Okay, thank you very much. Mom, please can you drop a PDF on this topic? There is all, I already uploaded a PDF. I already uploaded a handout. Ekpo, can you check there is a handout tab, and over there you can find my my PDF, my handout. Please try to download it and let me know if you face any issues with it. Okay? Can you check? There's a handout section, a handout tab. Yes, Nicole, VIX has the similar relationship to the Nasdaq as it does with the S&P. But in regards percentage-wise, S&P is stronger. Regards to that. But yes, absolutely, with all three major U.S. indices and in general the U.S. stock market. That's why I mentioned earlier that that it has been used by institutional players, also for hedging against against any stock that it might be a component of S&P 500. So if, let's say, you have a long position on a stock of a US company that was a constituent of the S&P 500, then VIX can be used on hedging your market exposure for that US company. Okay. I cannot drop it on our question box, Jeremiah, but it's there. I can see that you are using the web version of our GoToWebinar. So there is a tool, okay, over there, a tool, tab actually. The handout is not opening. Okay, guys, can you, if you're facing any problem with the handout, please send me an email at webinars@hfm.com. So support team and all the analysts are actually actually using that that email to reply to your questions. So I will be the team will provide you the handout as soon as they receive your email. Okay, appreciate it. Okay, Nicole managed to download the handout and save it nicely. Okay, perfect. So more examples, okay, in regards to the correlation of the VIX with the US stock market in general, based on the question that Nicole asked earlier in regards to similar correlation with other assets. And here it's an example in a 2-hour time frame, so short term, as you can see, and with the VIX and S&P 500, Dow Jones, Nasdaq, even occasionally with some European indices as well. So, guys, one more thing, because we are getting closer to the end of our session. We have covered what is VIX, how to use it as well, and how you can use it to balance also your portfolio, or how you can use it for hedging as well. So before we call it a day, I would like to also clarify that the CFD, the derivative contract of the VIX, as a usual index future contract, expired every month, right? So the expiration every month of the contract has also an impact on other markets such as Forex, commodities, spots, and futures, okay? So earlier I have posted an example, actually an example of FTSE as well, because FTSE as well is closely aligned to VIX movements too, okay? So that's why when we mentioned that it's a great index in order to identify whether the stock market in general trends or consolidates and etc. So have in mind that FTSE also is closely aligned to VIX movements too, and I have also demonstrated that earlier. Look at that. This is the FTSE in 2-hour chart. On the left-hand side, on the right-hand side, you have VIX as well, and you can see that this is the 4-hour chart. Okay, 4-hour chart and 2-hour chart. So there is a rally over here of FTSE and a drift over here for VIX. What else I wanted to add? I think that's pretty much it. I have posted on something from Rocky White. Actually, is the historical data of VIX. Some key historical highs that we have seen, okay? 1998, 2001, 2002, 2003, 2008, 2011, 2020. I should complete this table as well. But over here, you can see the historical highs of VIX and how the S&P 500 and in general the stocks after the VIX provided this signal, how they perform. So look at that, 40%, 43% decline on the 21-day high volatility. So we have a drift about 1.72% of the 2-week return. 32%, okay, break even, I would say, which is just a slight recovery. 14.5%, 9%. So over here we didn't have a strong correlation. Okay, it was a delayed correlation basically. We have seen the drift way in the overall trend, in the long term, in the 6 month trend. So this is an extreme level. Okay, this is an extreme level. 27, a decline of 7%. 21% rise, a decline of 3%. A 76% rise, a 15% decline. Okay, so these are the what a historically high VIX means for stocks and per time frame as well, per time period. So summary of S&P 500 returns after the instances noted above. This table shows, as I already mentioned, the typical index return since 1998, which it was the very first signal that we had ever from the VIX. It was created, remember that it was created in 1993. So yeah, so it's only 7 data points, including the 2020 boost. So you see, sometimes the decline, the negative correlation could happen fast, could happen in the short term, in 2 weeks, in a month, the maximum. Well, some other times it needs more time to be presented. So if there are no further questions, I'm gonna call it a date. Okay. Jeremiah, you're saying that you have finally downloaded the handout. Great, brilliant. Thank you for letting me know. Nico also downloaded it. Expo also, Benjamin. Great. So I can see you found the way to download the handout. Great. Anyway, remember that this is a session that is being recorded every time we record the session, and within 24 hours you're gonna have the recording in your inbox. In regards to the handout, if you're struggling to download it, if you're struggling to find it, don't worry about it. It's with a quick request to our support team, you will have it within the day. Thank you very much. How can one connect to HFM social media chats, analysis, and updates? So, okay, Barak. HFM social media channels. There are social media chats actually in our YouTube channel, in our Facebook channels, in our LinkedIn channels, in our Twitter as well, Instagram as well. If you I don't know, send a message via Instagram or via Facebook Messenger, our support team will reply on spot in our social media chats as well. In regards to analysis, always remember, visit our analysis page, www.analysis.hfm.com. And you can find the latest analysis that we provide on a daily basis. But yeah, everything is posted also in social media, so whatever is more convenient for you. Thank you very much. Have a great day ahead. And actually, in less than 3 hours from now, we're gonna host a live streaming, okay? My colleague Mihalis Efthimiou will give you a live stream, a webinar basically, okay? But throughout our social media. So join us, join Mihalis to have a very, very enlightful session with him as well. Thank you. Thank you guys. Bye-bye.